What's up, everyone? OG John XX here, and today we need to talk about something critical. Silver just went from over $110 an ounce to $78 in a matter of weeks. That's a 50% crash, the biggest one-day decline since 1980. And I'm seeing the same three mistakes over and over again that are absolutely destroying people's portfolios right now. If you're holding silver, if you're thinking about buying silver, or if you just got your face ripped off in this correction, you need to watch this entire video. Because I'm going to break down exactly what's going wrong, what the fresh data is telling us, and where this market is heading next. Let's jump right in. Mistake number 1, chasing momentum at peak prices. Here's the thing. When silver broke through $100 for the first time ever in late January, social media went crazy. Everyone and their grandmother was talking about silver. YouTube thumbnails screaming, "Silver to $200!" Reddit threads blowing up. TikTok traders telling everyone to buy. And you know what happened? Retail investors piled in at $105, $108, $110. They saw the momentum, they saw the hype, and they experienced the most powerful force in trading: FOMO, fear of missing out. Let me ask you something. If you bought silver at $110, where are you now? You're down 30%. That's not a small haircut, that's devastating. Listen carefully. Parabolic moves always correct. Always. When something goes up 147% in 1 year like silver did in 2025, when it shoots vertical like it did in January, that is not the time to buy. That's the time to be taking profits, or at least being extremely cautious. The fresh data shows us that silver hit multiple record levels, exceeding $110 in late January 2026. And then on January 29th, the sell-off began. It wiped out nearly 50% of silver's value. This wasn't a normal correction. This was a capitulation event. The mistake? Buying strength without a plan. Buying because you see green candles without understanding what happens when those candles turn red. Here's what you should do instead. Wait for consolidation. Wait for the dust to settle. Silver is now trading around $78.79. That's a much more reasonable entry point than $110. But even now, you need a strategy. You need to know your entry, your exit, and your risk tolerance. Don't chase. Be patient. The opportunity will come to you if you're disciplined. Mistake number 2, ignoring the industrial demand picture. Now let's talk about something most silver investors completely miss. They think silver is just like gold, a pure monetary metal, a safe haven, something you buy and hold forever. Wrong. Silver is 50% industrial usage. That's right. Over half of all silver demand comes from industry. Solar panels, electronics, electric vehicles, AI data centers, medical devices. This isn't just investor speculation. This is real-world consumption. And here's the kicker. The fresh data from February 2026 shows that industrial fabrication is forecast to decline by 2% this year to around 650 million ounces. Why? Because of something called silver thrifting in the photovoltaic sector. Basically, solar panel manufacturers are figuring out how to use less silver per panel because the price got too high. Think about that. When silver hit $110, companies started innovating to reduce their silver usage. That's supply and demand economics 101. Now don't get me wrong, the silver market is still in deficit. This is the 6th consecutive year of deficit, with a 67 million ounce shortage expected in 2026. That's bullish long term. But short term, reduced industrial demand at these elevated prices is real. The mistake investors make is thinking silver only goes up because of investment demand. No, industrial demand matters. And when industrial users start cutting back, that puts a ceiling on how high prices can sustainably go. You need to understand both sides of the equation. Yes, there's a structural deficit. Yes, supply is tight. But industrial thrifting and demand destruction at high prices is also real. This creates volatility. This creates corrections like we just saw. Silver isn't just a speculation play. It's an industrial commodity with investment characteristics. Ignore that at your own peril. Mistake number 3, not understanding market structure and volatility. All right, here's where most people get absolutely wrecked. They don't understand how violent silver can be compared to other assets. Look at what just happened. A 50% drop. In days. That's not normal. Gold doesn't do that. Stocks don't usually do that. Silver? Silver does that because of its market structure. The silver market is smaller than gold. It's more levered. Derivatives and futures trading amplify every move. When silver goes up, it goes up hard. When it crashes harder. And here's the critical mistake. People who bought at the top didn't have an exit strategy. They didn't have a plan for what to do if silver dropped 10%, 20%, 30%. They just held on, hoping it would come back. Then panic set in. They sold at $80, at $75, wherever they couldn't take the pain anymore. They bought high and sold low. The worst possible outcome. Listen to me. If you're going to invest in silver, you must understand volatility. You must have a plan. You must know your risk tolerance. And you absolutely cannot put all your eggs in one basket. Overconcentration in silver is dangerous. I don't care how bullish you are long term. This asset can swing 30 to 50% in weeks. If you can't handle that emotionally and financially, you shouldn't be heavily weighted in silver. The smart play? Dollar cost average. Scale in on weakness. Scale out on strength. Never go all in at one price. And for the love of everything, have an exit strategy before you enter the trade. The data shows us that global silver ETP holdings stand at 1.31 billion ounces. That's a lot of paper silver that can sell quickly when sentiment shifts. This creates the whipsaw action we just experienced. Respect the volatility, plan for it, or it will destroy you. So where is silver heading next? Okay, let's talk about what's coming. Based on the fresh data and current market conditions, here's my read. We're currently at $78.79. The structural fundamentals are still bullish. Sixth year of deficit. Fed expected to cut rates by 60 basis points by year-end, which is positive for precious metals. Russia is adding silver to reserves amid geopolitical tensions. These are all supportive factors. UBS is predicting silver returns to $100 by March, then falls back to $85 by year-end. Some analysts are even calling for $175 plus. But here's the reality check. Short term, we're in consolidation. Support is around $75, $78. Resistance is at $85, $90. We're likely to chop around in this range for the next few weeks as the market digests that massive parabolic move and crash. Medium term, 3 to 6 months. I think we work our way back toward $90 to $100 if the Fed follows through on rate cuts and if geopolitical tensions remain elevated. The deficit story is real. The supply squeeze is real. But here's the bear case you need to consider. If industrial demand continues to decline due to thrifting, if investment demand wanes after the speculative blow-off top, we could see silver drift lower toward $70 or even $65 before finding a bottom. My best guess? We're building a base here. This correction was healthy. It shook out the weak hands. The FOMO buyers are gone. Now we need to rebuild investor confidence with steady, sustainable price action. I'm watching $75 as critical support and $90 as critical resistance. Break above $90 with volume, and we're likely headed back to test $100. Break below $75, and we're going to $65.70. Final thoughts. Look, silver is one of the most exciting markets to trade and invest in, but it's also one of the most dangerous if you don't know what you're doing. Avoid these 3 mistakes. Don't chase parabolic moves. Don't ignore industrial demand dynamics. And for the love of everything, respect the volatility and have a plan. The opportunity in silver is still there. The structural deficit is real. The monetary backdrop with Fed cuts is supportive. But you need to be smart, patient, and disciplined. If this video helped you, smash that like button. Subscribe to OG John X.X for more real talk about precious metals and markets. And drop a comment below telling me which mistake you've made or what you think happens next with silver. I read every single comment. Stay sharp out there, and I'll see you in the next one. This is OG John X.X signing off.